All right, good afternoon. We're back looking to take this account once again, starting at $50. Well, actually, the account is at $66.74. I see that SPY has a bit of a pullback in the past few days. Basically, just about 3 days of pullback from the high, and now we're hurling back up in some type of a possible flag pattern. And there's some good news happening. Apparently, negotiations and whatnot are coming to a close, which seems positive. The market seems to like it. Now there is the thing I've been talking about, where how the average drawdown on the S&P, I think it's the S&P specifically, but the average drawdown, oh my gosh, what's going on? The average drawdown, yeah, for the S&P is around an average of 10 to 15% from the end of the first month, which would be the end of this month, till the end of the first year, which would be, I assume, the end of May next year, or it would be the end of the first full year. So I don't know the exact date how that works, but we have a new Fed chair, Kevin Warsh, who came in on May 15th to replace Jerome Powell after his 8 years tenure. Jerome Powell stepped down as to the Board of Governors at the Federal Reserve, and he's not going to be a shadow chairman. He's just going to be there to vote, and to people still will be looking after Jerome for his advice and for his opinion. So they have a good collaboration. I've done some research on Kevin Warsh in a little bit, and I have a little bit of a brief history on Kevin Warsh and the Federal Reserve to talk about here soon. But I do want to come back here and really it's time to scale this account from $50 to 50,000 and further. And I don't really have any time to waste anymore. I really need to get this going, and I can't really mess this up. I've already had to reset the account a few times. So basically, I'm looking for some momentum here in the last 2 hours of the day. Right now it is 2:12 EST, 11:12 PST, and the market is rounding out really well today. We have a nice rally here in the past hour or so after this consolidation, so this is really nice. But I will say there's a bit of a gap that we could go and try to fill, which is at that previous all-time high from last week. And this was the Fed chair day on Monday. Well, no, this was Friday the 15th, and then Monday the 18th. So on that Friday, we actually had gap down when Powell left, and we've been on a slight pullback since. It's not really much, but the other thing is that SPY since the beginning of April is up about 15% from here to here. That's about, I don't know if this will measure it. No, it doesn't measure it. I have to get the actual measuring thing, but from this low down here all the way up, that's 18%, it's like 18%. But with that statistic in mind, it's interesting because we just had this rally from the bottom up here, March 31st. And if we were to have some type of a pullback for whatever reason in the coming weeks or months, it would be a short pullback back down to here, which would align with the range that I was talking about, which is like 667. This is about 10% down from here at the close yesterday, 667, and all the way down to 630, which is pretty much correlated perfectly with this low here. So this entire move that we've made, 15, 16, 17, 18% up to here, is pretty correlated with that average drawdown from the end of the first month to the end of the first year under a new Fed chair, which doesn't happen all too often. And that doesn't mean that it's going to end up there by the end of that first year. It just means that it can happen at any point, and it's just a drawdown from that point. But in the graphic for Jerome Powell, for instance, when Jerome Powell came in 2016. In the first month, the drawdown was about 4% on the S&P 500, and in the first 3 months and 6 months, it was around 8% drawdown. And then by the end of the first year, which I assume is like 365 days or one full year from the date, that's what I'm assuming. It was actually negative 20%. The S&P 500 was negative 20% by the end of the first year, after Kevin Warsh came in and Trump had appointed him. So that correlates with this entire rally, and I think that's kind of interesting. And on Qs, I don't know, it's probably more than that. I don't like this tool. Yeah, 29%, wow. Much bigger move on Qs, 29%, but we're talking about the S&P 500. VIX is looking really low. Oil's been coming back down under 100. Crude oil been consolidating at a higher level, but starting to look somewhat decent, and the market is responding pretty well to all the uncertainty. And well, the dollar is actually pretty weak, which is pretty good. And Bitcoin's still doing the same thing. It's hit this resistance, which is kind of obvious, and it's stagnating. The Clarity Act is getting closer to being passed, and that's really going to be the catalyst. So now I am looking for an opportunity to take a trade. I'm not really trying to look too much into it, but I want to see some momentum here, whether it be further upside into that gap, or if we pull back, then we can capture that possibly. But I'm looking to, with my account being at $66.74, I'm looking to do a very similar risk management strategy, looking to take like a $30 position, risking $20. And on the upside, I would look to make 20, 40 for a 1-to-1 or 2-to-1. And I have to kind of stay in a smaller range in terms of profit taking for some time, because I can't really afford to have trades somewhat work and then fail and then take a bigger loss, which has happened a few times, and it's really holding me back from being able to make more progress here. That's putting in a bit of a pullback into this area here. This can definitely act as support as we have a base here. This is almost an inverse head and shoulders kind of a look right here with this weird gap. I don't know, is this a daily gap? Not necessarily. It's just a gap down. So it's not necessarily an open gap, but it is possibly liquidity zone that we can come into, and if we can get some more buyers and break through 745. Over 745, I think it would be pretty solid for calls on a late entry. But if we do pull back, then it will be a little bit more difficult. But I mean, honestly, if it were to pull back here, this was actually a pretty solid rally. I didn't realize this is like a $5 rally here that we just had from 1 o'clock, and now 2 o'clock, 2 hours left in the market, getting a slight pullback, but so far it's quite bullish after this move. So I'd like to see if we can hold up here, act as some support, use this to act on support, and then bounce. So I'm just going to be patient, looking for an opportunity to trade, to take a scalp. Not really much of I'm not looking to make an outsized return necessarily yet right now, because I can only take a few trades and risking the amount that I'm risking, and I have to be a little bit more discerning about the trades that I do take. I'm gonna go over this Kevin Warsh address here soon so I could get that done. I've been meaning to do that already for a while now, but it's been like 2 weeks and I need to get that done. Give me a moment. Do that. Let me check out these option chains, see what it looks like. I haven't looked at it for like a week. I haven't really looked at the chart much for like a week, or the option chain. Pretty solid. ARM is up 12%, SanDisk is up 9.8%, CoreWeave up 5.8%, Qualcomm up 5%, and Micron up 3.5%. So a lot of the semiconductor, the chip names are bouncing pretty good, and they're very close to their all-time high. Very similar pattern to SPY. And the SPY option chain right now, 743. Yeah, so like the 745 call here is only 30 cents. So that's kind of what I'm looking at here, is like the 745 call. It's 30 cents right now. And we're elevated above the 9 and the 21 on the 15. And we're right at the 9 on the 5-minute chart. I do feel like it's likely that this bullish move will continue into the end of the day, given that there's looming positive news that's supposed to be possibly coming out. It's not guaranteed, but it could happen in the next couple of hours, which would benefit the market because it'll put some ease on the oil uncertainty in the Strait of Hormuz with negotiations with Iran. So it could go either way, but for now I'm going to be a little bit patient. We're going to see if this chart can pick up the momentum again, because we just had a pretty solid move. So now I don't want to get stuck in any job. And also, NVIDIA's earnings came out yesterday and they were very good. They raised their dividend up a lot, from 1 cent to 25 cents, which is pretty nuts. But they're pulling in so much cash that it's pretty reasonable for them to do. Way bigger than Meta or Facebook's dividends increases. Meta's a cash printer as well. They make a ton of money from their ad business and whatnot, but NVIDIA, they're just totally sold out, and they're just like doing everything they can to get more volume on their products so that more people can get their hands on them, like Elon and Anthropic and OpenAI. I think if we can get a continuation handle right here, I'm kind of interested in this 745 call. And the problem is it's like 33 cents, 34 cents, so it's going to be, but I would prefer to get that because I think that's really reasonable for us to break 745, given the looming positive news and NVIDIA's earnings yesterday and the gap with liquidity on the upside with this recent move we just made. these contracts are already moving. So, but yeah, I do want to take a call here soon if we can get some confirmation. Right now, it's not necessarily confirmed, but and I really prefer to take a late entry, which means I want the momentum to begin to happen, and then I would probably end up going for the 746, which the 746 is trading for 18 cents right now. So with some confirmation, it can get up to that $30 area, which the low or the high of the day on that contract is 66 cents for the 746 call. So it reaching 30 doesn't really mean anything, but confirmation on this chart above this down candle, like right here at 744, basically at 744 with momentum, it could be, well, it would be somewhat of an early entry, but I would be willing to take that and still have the same risk. So I'm not being like super systematic about the trades that I'm looking to take now. I'm just really trying to find the momentum and try to capture the trade, whether it be slightly early or in a late entry. I'm looking to just be on the right side of the trade and scalp it for whatever it's worth and not try to be in the trade for too long. Ideally, the trades that I will take will be 5 or 10 minutes, 15 minutes at the most, almost, because time is of the essence with these option contracts. They really move a lot and they're very volatile, and it's kind of hard to manage, especially with a small account when I'm trying to take 3 trades and I'm risking a third of my account on each trade. It seems crazy, but that's how you have to do it. If you're starting with $50, $60, even $100, you can only do so much, and you have to be willing to take the risk. And I did that last week. I took 4 trades and they all lost in a row. It was terrible. Or this was 2 weeks ago, actually. So it's not ideal. But I really need to build this account up. I need to find a way to actually capture and capitalize on this market right now, because there's no reason that I can't. The only reason why I don't is because I mess up my risk management or I refuse to take a loss, which happens often. And so I need to really stick to those rules more specifically and diligently. All right, let's see. Maybe I should take, no, see, the 745 is moving a lot, but it was back to 30 there, bouncing off of that 9 EMA. This could be a hammer candle. It could be a decent entry after the close at the high of 744. If that could happen here, then I would probably have to lean into the 746 call and look for that move over high day. We'll see. Maybe I'll take that trade right now, and then I gotta read this address on Kevin Warsh to accompany the Jerome Powell previous one that I think it's pretty useful, and it's good to know the history of these guys and the importance of their roles at the Federal Reserve and the independence from political objectives and the new monetary era with this data center infrastructure build out, which is totally unique. We've never seen the likes of it before. And there's really like an overwhelming amount of positivity and optimism in terms of the market, in terms of technology and innovation. Although political landscape is messed up, a lot of other things are not so great, and there's a lot of pessimism and negativity and violence and terrible stuff happening around that, and it's terrible and it needs to stop. But for me, I'm focused on economics, and I think that right now we're going into a period where we may have an expansion that's unrecognizable from history, or maybe like the late 90s, but with no harsh ending, without the crash in 2001 or 2000. Even Nvidia, I was looking at that, even Nvidia it was like $3 during 2000, and then it crashed from during the dot-com bubble. It crashed from $3 to 13 cents, at least adjusted for splits now, which is insane if you think about it. $3 for Nvidia down to 13 cents for Nvidia. That's what the price was back in 2000. And even it was even like $20 in 2022 when OpenAI dropped ChatGPT, and then everything started to roll out and all this started to happen. Let's see what this chart's going to do. It's not holding up as strong, but it's definitely consolidating here. As long as we don't break that previous low right here around 743. Is that? I don't know. Yeah, I guess. Yeah, around 743. Like right here. As long as we can hold up this area here and we can make a move higher, I'd be willing to enter a call. 746 or 745 would be more ideal, but like 745 right now is 29 cents. But there's no confirmation here, so I could enter it for 30 cents right now, which is my ideal price for entering the contract, and my risk would be down to 21 EMA based on that, which you can't see it here, but it's like right here, which is a little bit lower than this low, which would be an obvious confirmation of a lower low and the move slowing down. So it seems reasonable, but this would be an early entry that I don't necessarily love, and I would almost prefer a bigger candle to come in a closer and then enter this strike higher, which would be $1 above the high day. The high day is almost 745, which is pretty good, but the high a day on the 745 call is $1, over $1, and it's only at 30 cents now, and we're really not far off of it by $1.40 from that spot. Made a really big move. So that's the tricky part right now, is that to judge whether this momentum is going to continue in the last hour and a half that we have now. I'm definitely looking to go long, and I'm leaning in that direction, obviously, but I don't want to enter too early. I got a bit of a headache today too, so it's kind of rough. That's why I came on a little bit late. I got this massive headache for some reason, but it's fine, not a problem. So the good thing is that there's room to the downside now since we made this big move, and there's also room to the upside since we have that previous all-time high and some kind of a gap, a downward gap overnight from the close to the open, which it looks kind of weird, this gap, but this is because I don't know if there's an earnings, but I assume this is mostly because of the Federal Reserve chair change. So we gapped down on that day in the morning on the 15th, about 1%. And we've been kind of struggling for the past week or so since then. But we're kind of getting a good move here now, so this is a good look, and I like it. So I would like for this to hold up and then make this move higher. And I think that's reasonable. So we'll see where the entry comes in. Now the 745 calls down to 25 cents, so we're really consolidating still. Hour and a half left in the market. Plenty of time to capture another leg. Momentum is slow, or the volume is decreasing over the since 11 o'clock, since 2 o'clock Eastern. The momentum has been slowly dwindling. If we lose 743, then it's not quite so good, but maybe we'll be looking for a retest down. We can come all the way down to that previous levels. It's down there at like 741, 741.50, 742-ish. That could happen as well, and that would make the rest of the day pretty boring and slow, which would suck. I would prefer for us to rally a little bit more. It'd be easier to capture that move. And the 52-week high right now is 749.53, so there's plenty of room within that gap if we do get any positive news, and if this momentum, the volume can pick back up. $7.45 call, almost down to 20 cents there, down to 21, 20. Okay. If we can get an increasing volume to the upside in the close of a candle, that would be better confirmation for me to enter a long entry on a call. And last week I think it was last week, I actually added Nebius and SMCI in my long-term portfolio. I bought a small position of each. Because SMCI, I think that they're going to have some integration with Terafab, and I think that's coming soon, and I think that's going to be possibly a good revival for them. Well, they need some type of revival. Obviously, they had some scandalous employees, and they got fired, and they got whatever happened to them, I don't know. But now I think SMCI has a decent chance for it to get picked up by Wall Street in the next several months to the end of the year, given the big IPOs and the big liquidity and everything coming up and the Terafab build out. So I think I have a suspicion about SMCI. I've been thinking about it for a while. So I added that, and then also Nebius. It's a little bit more expensive, but I think it's still relatively cheap. It's only a $55 billion market cap, and it's a cloud hyperscaler, and they're doing some other infrastructure. And I think that it's going to be really good because they work directly with NVIDIA. And NVIDIA even is, well, a lot of people would say NVIDIA is undervalued now compared to a lot of other names in their PE ratios. And NVIDIA makes just a ton of net revenue. You know, we're starting to get a red candle down into that 743. Still decreasing volume. So yeah, my main goal really is just to trade this account, this small account, and turn it into a medium or large size account, and turn it into an income source, and replace my job eventually. Because I'm looking for a career, I'm looking for a better job. I might apply to SpaceX and Palantir actually this week, just for fun. But but yeah, even outside of that, I really need to find more income sources outside of all the other things I'm doing, trying to start um, doing my research and publishing and things like this. Okay, but now we're starting to get a little bit of a good candle, but I don't see the volume behind it right now. No confirmation. And I do believe that the trading will become easier as I practice, and you have to fail a bit over and over, and learn the lesson that you can't hold losers, and you have to hold winners, and you have to be cautious. Or for me, I'm looking to take a late entry, early exit, capture momentum, and I'm not looking to make any predictions. I'm not looking to predict where the market's going. I'm not looking to decide my fate. The market will decide the fate of the trade every time, whether it be good or bad. My only the only thing I can actually do is follow the plan by stopping out at the right time and trying again the next time. And when I'm able to scale the account to a few $100s, then I'll be able to have much more of a longevity, and I'll be able to take a little bit more risky trades. I might even trade SPY and QQQ. I might even, when an account gets to even 5,000 or more, I might even trade regular names. I might buy some swings. I might buy a leap contract. I might do more and diversify my positions and the types of trades that I take, still while managing and looking for intraday day trades, scalping opportunities to bring in income, because I have a lot of bills to pay. I have things to do, and I really need to get a move on it. But there's no rush. It's really just me trying to document my experience in my trading so that I can really refine it over time and become better, which I haven't done for the past 6 years. So there's no choice anymore. I have to do that. Okay, I like this candle. I don't know where it's going to close. We still have a minute and a half. 745 call is actually 27 cents right now, so I kind of might consider entering it. I like this candle, but I really would prefer it to close in 1 minute and 15 seconds, and then take it for 30 cents if it can close higher. But that's the thing about trying to trade a specific price contract, that a lot of the time the move will happen and then it'll price you out, and then you'll have to go a strike out, and then the risk to reward gets skewed by doing so. I still don't see the volume is not like really increasing by much. The candle looks good though. I may look to take an entry here soon. Contracts at 28 cents, closing in 30 seconds. See if I can get that confirmation and then enter it. It's not a perfect trade. Most trades are not going to be perfect, but I'm leaning in the direction of the trend. The trend on the low time frame, the high time frame is all the same. They're correlated. And like I said, there's looming positive news that could come out. They keep talking about it, and it's coming into a convergence where the market's going to eventually have another breakout over 749. And I'm still waiting to see the flip on Qs and SPY, which is not quite there yet, but so there's a good close. It's kind of increasing volume, but not by much. But QQQ is at 715, SPY is at 744. they're getting very close, and I think that they're going to flip very soon. Qs will be leading in price, not in assets or not in terms of volume, but definitely in terms of price and momentum. See, these contracts are like really volatile now. It's down to 22 cents to 745 now. Hour 15 minutes, and just one green candle here, barely increasing volume. The contract just went from 28 cents to 21 cents. We dropped 30 cents on the chart, so that's really weird. There's something fishy happening here. These contracts are moving volatile for no reason. Maybe the reason is that we're about to get a move. All the semiconductor sector, and I mean, honestly, I mean, AMD, Intel, and AVGO and NVIDIA are red today, so I guess those are the big ones taking a hit. But all the other affiliated infrastructure plays like Oracle and what do you call it, Micron and CoreWeave are up today, and ARM and SanDisk. For some reason, these quantum names are up 20% today, 28. QUBT, QBTS, I don't know why they're up. Trump administration to take quantum stakes. Okay, so I guess the Trump administration announced they're taking a stake in quantum names. $100 million deal for D-Wave Quantum, QBTS. Okay, that momentum died real quick. So we're still chopping. Not ideal. These contracts are getting real cheap now. These contracts are getting very cheap now. It's surprising. Just in the past 10 minutes, these contracts have like deflated by like 50%. Like, no joke. We haven't even changed price. These contracts lost half their value real quick. I want to see it break out of this consolidation here, and we can go whichever direction. Back down to 743. I think the government took $100 million stake in QBTS. Don't know why. Well, I know Google has their quantum thing, so maybe that's maybe they're paying attention to that, and they're starting to notice that the scaling of quantum qubits is increasing. I don't know exactly what that looks like right now, but I know Google's quantum segment had a breakthrough recently, a few months ago. I can't really recite it because I don't exactly remember what it was, but I remember Google having some breakthrough with their quantum just recently. Now these quantum stocks are getting pumped up by the government. Okay, we're getting a big sell here. Holy, these contracts just went crazy. All right, so there's a big red candle down to the 21. That's pretty crazy. I think I'll take a 741 put. I can't even get it. It's just moving way too fast. It's impossible to get. Can't get it. Yeah, I can't get it. Tried to get a 741 put, but it's just moving too much. It's not really. See if this candle will close down here. 30 seconds. We're starting to lose this move. Like I said, we can come back down to 741, 742. We're already, this candle just kind of happened in like 3 seconds. That's crazy. Let me see if I can get that 741 right here. 32, 31. No, it's not going to let me. No, actually I did. Okay, well, I don't know what price it is. All right, so the 741 put at 32 cents, kind of a late entry. There's the close below the 21. That's pretty decent, but so yeah, I got the 741 put for 32 cents. My stop is at 10, 12 cents. So, but this candle is pretty indicative. So let's see if this momentum will continue. That volume just increased on the downside. We closed below the 9 and the 21. So let's see. Just taking a stab at it. What a weird candle. It kind of kills the bullish momentum, though. From my perspective, I don't really see it breaking above that candle again. Above 743.70. Or 743.50 even. The open of that candle. That big red candle that we just had. Close below the 21. Took the 741 put for 32 cents. It's at 28, so it's obviously we're starting bouncing slightly here, which is kind of expected, but the better entry maybe would have been like a retest here at the 9 and then go lower, but in terms of momentum. But just let it. Oh no, that. All right, that's better. Let's see what happens here. The chart always does this weird stuff where it makes a one weird candle and then it just like reverses it, and it's like, I don't know, it's weird. Happens all the time. I always get caught in a situation like this where we get a momentum candle and then I enter at the close and then we just get one bounce candle that kind of kills it. But it's fine. I really don't really care too much. I'll just take the stop loss when if we do get a stop, but I'm looking for that move down to 741 if we do get this momentum. Okay, the contract's already moving pretty good. I should probably just sell it here then. So I guess I will get out of the contract here. It's already up 100%. It's not really letting me out though. Okay, sold the contract for, we got another candle, sold it for 70, so 32 to 70, it's over 100%, so I mean it happened in like one candle there. These candles are weird, so I just took it off, whatever. So took the contract from 32 cents to 70. My account's now $103.42 from $66.74, so that's pretty good. Oh, we did, I should probably put the 21 here, but this candle closed literally right below it. That's where I entered $32 contract on the 741 put. Considering that we have this support here, which, I mean, you look, we just bounced off of it, but looking at this relative support, the momentum clearly was to the downside with this volume, which is very similar here. Just a reversal of this, which kind of sucks. I was hoping we can go higher, but entered here and closed like right around here for about 70 cents. Maybe it went higher than that. I probably got a bad exit because it happened really quickly, but sold the contract for 70 cents, which is over 100% from 32. So the profit on the day for that trade was $38. So that's pretty good, honestly. That brings my account up quite a bit just for that. It would be worth the hold, but you know, this is the first trade I'm doing since I reset this account. I'm back. It's been like a week and a half since I took a trade. I've been busy, really busy, honestly. So there we go. There's a good winning trade. That's pretty good. Made $38 or like 110% on this red candle that we're in right now. We're about to close in 30 seconds. These candles are happening quick. It's kind of weird. I don't really know what the news is right now. Oh, okay. No, I don't see it. I don't see anything. Yeah, we're getting it. This is a weird move. Contract's at $100 now. I sold it at 70. It's at 112 now. But anyways, that's pretty good. So that's the trade for the day. I may just stop there, and I got to do this address on Kevin Warsh. I really think it's important, and I really think that a lot of people probably don't really look into him. They don't really understand what's really happening with the Federal Reserve, the new chairman, and how he's correlating with not just the AI infrastructure and deflationary potential of that, and the productive capacity that's actually happening in the jock market, and inflation that's increased right now. It's at just read 3.8%. Yeah, that's a pretty gnarly candle down to the VWAP. Well, it trades at $142 from 32. That's pretty nuts. Pretty nuts. We'll see. That would have been a really good trade to hold a bit longer, but you know, that is totally fine. I don't really mind because I wasn't even really expecting it to pull back that much. I was leaning bullish, to be honest, but no predictions. Just that candle was pretty clear. It worked out. We'll look for another trade tomorrow. Was still not even in power hour. 4 minutes till power hour. I still got a headache. It sucks. At least I had a nice trade there. That was pretty good. But just need to basically do that, repeat that process 100 times until my account's at 50,000, and then my goal, though, actually, what I would actually want to happen would be to scale this small account up to around $5,000 from $50, which sounds crazy, but it's really not when you just know how to day trade and you are really good at risk management. It's really doable. It's possible. It's not guaranteed, but the idea would be to take the account up to 5,000, withdraw 1,000, withdraw 1,000, and start to maybe even before that, I will withdraw some to subscribe to TradeZella, so I can have that trading journal that's live on there. So I really want to use that, but I don't want to do it just with my own funds. I want to do it from money I make from the trades. So that's the only way that I'll do it, is if I can pay for that subscription for TradeZella trade journal with a withdrawal from my account. So I'm using Charles Schwab to trade, as you know, and I do want to put my balance and everything, my positions on the screen as well, but I haven't really messed around to figure that out. I don't even have it downloaded on this computer. I use my phone to enter and exit trades. And then I would be looking to get to the point where I can withdraw $1,000 a week from my account if I can manage it properly and scale it up to 5, 10, 50. And through doing so, I think if I can demonstrate the success through doing so, then it can change a lot of things. It could really be positive, and not just for me, but for the documentation and for other people to be able to see it and to learn from what it really looks like to actually fail and lose, and then in order to become successful and win in the long run with trading in the market. And given that we're in this exuberant time, it's really fun to keep track and to really be a part of it and be a participant in the market, not just trading but long-term investing. Like, I just bought Nebius and SMCI, and I have Intel, AMD, Nvidia. I have all these app Tesla, and I'm trying to get to the point where I can put more money into my long-term. So ideally, trading short-term will fund not just my lifestyle, not just like my income to replace my income or increase my income, but really to also have the capital to invest into the names I want to. I wish I could put more money in a lot of names. There's a lot of different names. I'm not going to even list them, but there's plenty of names that I wish I could invest in for the long term. I'm talking decades. I'm talking I want to invest for the long term and build my portfolio up from a Roth IRA to an individual investing account. And I even have crypto and portion of my one of my individual accounts on Robinhood. So I really need to gain capital so I can allocate it to some of the places that I believe it should be. And I can't really do that working the 9 to 5 that I have. It doesn't work. You know, I could barely get by, barely scrape by. I can't really save up much. That's why I'm trading with $50, because it doesn't really matter to me trading $50. Like if I lose it, I can just restart it. It's fine. It's not a problem. I've already had to do it like what, 3-4 times almost. I think 3 times, but so it's really not a problem for me, and I'm not worried. That's why if you trade small, you take the emotions out, you remove emotions from the situation, and you trade systematically, or you try to be discerning and you learn from mistakes that you make. Then it's much easier to eventually scale the account up from $50 to $100 to $1,000 to $10,000, $50,000, and it just goes so on. And so that's really what I'm trying to demonstrate. And it's going to take time. It may take 1,000 days. It may take a full year. It may take, you know, like 1,000 days is 3 years. It may take 4 years, 4 market years. The market is open 252 days a year. So that'd be just about 4 years. I mean, I don't think that's going to take that long, but I think I can do it in 6 months or 9 months, honestly. But the point is that I've already been doing this for 2.5 months now, since March 1st, March 2nd. And I haven't really made it too far. I've made it like 130% and back down in a couple times. And so now I really need to really be a little bit more serious about the trades I take and risk management specifically, in order to not let it fail. Quantum computing will be useful in this decade, they're saying. Wow, that's interesting. But how useful? Like 0.01% useful? That's what they say about nuclear fusion. How useful is it really going to be in 10 years? Like, they keep chilling it, but I think we should build solar panel arrays in space. Like, why don't we? I mean, we have satellites, but we need to build massive solar panel farms and arrays everywhere, low Earth orbit, everywhere. I think that's more effective. But that's not what they're doing. They're trying to go all in on nuclear fusion to make cheap, unlimited, clean energy. And that sounds great, but it's going to take time. So let me see. I'm going to try to pull up this so on the new Fed chair, Kevin Warsh, the man before the chair. So here's an address on Kevin Warsh in the Federal Reserve. Okay. The address on Kevin Warsh, the new Fed chair, the man before the chair, Kevin Warsh, an address on the brief history of Kevin Warsh and the Federal Reserve. He started his tenure May 15th. And so this is the compilation that I've compiled to demarcate the current time, the monetary era we entered. Even though it seems like nothing, I think it's a big deal. And I think we're going to look back on this as a very positive thing, possibly. And I'm being optimistic. There's no guarantees, but in light of the facts in the history, a long history of that you can study of not just Jerome Powell, but Kevin Warsh, the new Fed chair, and they will be working alongside each other on the same table from here forward. And there are moments in the life of a nation when the person chosen to lead an institution tells you something about the era itself. Kevin Warsh's confirmation as the 17th chairman of the Federal Reserve on May 13th, 2026 is one of those moments. He steps into the chair on May 15th, and he just started his tenure this week. 2 days after the Senate confirmed him 54-45, with Pennsylvania Democrat John Fetterman the only member to cross the aisle and vote in favor of Kevin Warsh, which is pretty interesting. The margin tells its own story, and so does the timeline, and so does the man himself, Kevin. So to understand the moment, you must understand the man and the mind. To understand the mind, you must understand the path. And for that, you must understand what Kevin Warsh has built and done over the past 15 years when no one was watching. No one knew about this, but until as of recently, the past few years, Kevin has been nominated and really nominated by Trump in the Trump administration, but also Trump has been leaning into him to cut rates, which is something that Powell has been holding back on because of the inflation hasn't quite reached target, and whatever other factors that they play into, like employment, isn't exactly so clear right now with all the things happening in the efficiency, productivity, and artificial intelligence. So Kevin Maxwell Warsh was born on April 13th, 1970 in Albany, New York. The youngest of 3 children, his father built companies, his mother wrote stories. He grew up in Londonville and competed in tennis through his high school years at the Shaker High School. He went to Stanford, studied public policy, and graduated in 1992. He went to East Harvard Law, earned his degree in 1995, and joined Morgan Stanley in mergers and acquisitions the following year, rising to vice president and executive director of investment banking at Goldman Sachs. He was a lawyer before he was a central banker, and he was a banker before he was a central banker. As with Jerome Powell, that distinction matters. The economists who have run the Federal Reserve have, with notable regularity, mistaken the model for the market. Warsh seems to know the difference. In 2002, President George W. Bush brought him into the White House as a special assistant for economic policy and executive secretary of the National Economic Council. He entered government in the aftermath of Enron and WorldCom. We're talking about, 2001, 2009? Or both. When trust in American institutions was shaken and the rules governing corporate behavior were being rewritten in real time. 4 years later, 2006, Bush nominated Kevin Warsh to the Federal Reserve Board of Governors, and he was among the youngest appointees in the institution's history. He arrived without a doctorate, without an academic pedigree, and without the standard credentials of central banking. What he brought instead was something that institution had lacked: real-time market experience, legal discipline, and a White House understanding of how consequential decisions are made under pressure, on incomplete information, against the clock. Chairman Ben Bernanke, assigned him a new mission: integrate capital market intelligence into the Fed's decision-making in ways that had not previously existed. That assignment would take on an entirely different meaning within 2 years. The financial crisis struck in 2008. Kevin Warsh became one of its most active participants. He worked closely alongside Bernanke and New York Fed President Timothy Geithner. He negotiated directly with Wall Street. He helped his former firm Morgan Stanley survive the meltdown. The balance sheet doubled in a quarter. The emergency lending facilities deployed at an unprecedented scale. QE1 launched as a crisis measure, and he supported it without hesitation, and the scale of what required was clear to him. The case for emergency intervention was not in dispute. But his reservations about what came next were immediate. They were documented from the beginning, and they never went away. By March 2011, when he resigned from the board before his term expired, he had already described quantitative easing as limited, circumscribed, and subject to regular review. A standard he believed the institution had quietly abandoned. That resignation was itself a statement. Governors do not resign before their terms expire for procedural reasons. He left the institution because he was moving in a direction he could not endorse, or the institution was moving in a direction he could not endorse, even from inside it. And for the next 15 years, up until now, Kevin Warsh had built an intellectual case with unusual discipline and consistency. His argument ran on a single thread. The Fed's balance sheet had grown beyond any defensible mandate. Quantitative easing had redirected capital from the real economy to financial assets. Forward guidance had reduced both flexibility and credibility, and the institution had accumulated influence and authority that properly belonged to elected government. He was not quiet about it. As in 2015, he told CNBC, "Financial markets and the treasury market are telling us almost nothing about the state of the economy because central banks are influencing those prices with every word, every nuanced speech from every Reserve Bank president." In 2016, he wrote in the Wall Street Journal, "The Federal Reserve needs new thinking. Its models are unreliable, its policies erratic, and its guidance confusing." And that's correlated with the chairman, Jerome Powell, coming in 2016. And in 2018, just 2 years later, standing alongside Ben Bernanke and reviewing a decade of quantitative easing, he said that my overriding concern about continued QE then and now involves the misallocations of capital in the economy and the misallocation of responsibility in our government. Misallocations seldom operate under their own name. They choose other names to hide behind. They tend to linger for years in plain sight, until they emerge with force at the most inauspicious of times and do unexpected harm to the economy. At the Hoover Institution, he puts mechanics plainly. If we would run the printing machine a little quieter, we could have then lowered interest rates. So that's a keynote. These were not stray remarks. They were not a performance. This is his worldview, argued across 15 years at a consistent register without revision, its essential conclusion. A warning delivered in public repeatedly to an institution that did not have to yet listen to him. And an honest account of Kevin Warsh's history over the past 15 years requires stating the complexities directly. So he had voted for QE2 in November 2010, and simultaneously, a few days later, published in a Wall Street Journal an op-ed criticizing that very policy that he had formally approved. In October 2024, he publicly questioned the Fed's rate cut, accusing the institution of abandoning data dependence. 13 months later, in November 2025, he published an op-ed in the same publication calling for rate cuts. His monetary policy positions have at times tracked the political environment more closely than the economic calendar. Senator Elizabeth Warren was direct about it. She called him a sock puppet for the administration and warned that installing him as a chair would represent a presidential takeover of the Federal Reserve. That's just the facts on the record. That's part of the account. And that's the lens through which his tenure will be measured. Whether that independence is held and the credibility of the institution at the Federal Reserve remains intact by supporters and critics alike. That record is what it is. What he does with the chair is what matters now. On January 30th, 2026, President Trump nominated Kevin Warsh as chair of the Federal Reserve. The confirmation process was contentious. It was shaped by a Department of Justice investigation into Jerome Powell. It was delayed by Senator Tom Tillis's blockade, maintained until the investigation was resolved. It was watched by markets, policymakers, and the public with a degree of attention that itself measured the stakes. At his confirmation hearing before the Senate Banking Committee on April 21st, 2026, Warsh addressed the question of independence without ambiguity. He said, "The president never once asked me to commit to any particular interest rate decision, period. Nor would I ever agree to do so if he had. I would be an independent actor if confirmed as chair of the Federal Reserve. So let me be clear. Monetary policy independence is essential." The Senate Banking Committee advanced his nomination 13-11 on April 29th. The Senate confirmed him as governor 51-45 on May 12th. The Senate confirmed him as chair 54-45 on May 13th, 2026, with John Fetterman once again being the only Democrat to cross out vote in favor. He was sworn in on May 15th. His first FOMC meeting as chair is scheduled for June 16th or 17th, next month, 2026. He inherits a Federal Reserve with a federal funds rate of 3.5 to 3.75%. He inherits CPI running at 3.8% year over year as of April 2026. Above target and moving in the wrong direction, he inherits gas prices rising at the fastest pace in 30 years following the outbreak of conflict with Iran. He inherits committee where the regional Fed president signaled at the April 2026 FOMC meeting that the next move could easily be a rate cut as easily be an increase as a cut. He inherits a Governor Jerome Powell who remains on the board with a full vote through January 2028. And he also inherits a president who wants him to lower rates and who nominated him to deliver that. Although he's mentioning how he will remain independent and monetary policy independence is essential. He also inherits the accumulated consequences of the very policies he spent 15 years arguing against. The balance sheet that is now near 6.7 trillion reflects choices made across 4 rounds of quantitative easing, across 2 administrations in response to a financial crisis, a pandemic, and a decade of demand management conducted at the limits of what monetary policy can reasonably deliver. He did not create those conditions, but he must navigate from inside them. The Federal Reserve's independence is not a technocratic preference. It is the mechanism by which monetary credibility is protected from the political cycle. When it holds, inflation stays anchored, markets function, and the dollar remains and retains that trust that makes it the world's reserve currency. When it erodes, the costs are felt by every American who buys groceries, pays rent, or carries a mortgage. The case for it does not rest on deference to experts. It rests on more than a century of evidence that credibility once lost is expensive and prolonged to restore. In the new era, the United States entering a period of structural economic transformation that has no recent precedent in its combination of components, and the Federal Reserve Chairman who governs monetary policy through it will shape the cost of capital for the entire investment cycle that follows. The AI infrastructure build-out now underway represents capital deployment at a scale not seen since the electrification of the American economy. Public and private commitments to computational infrastructure are running well into the hundreds of billions of dollars. The onshoring of manufacturing capacity accelerated by tariff policy and supply chain reorientation is rebuilding domestic industrial production in critical materials, semiconductors, advanced technologies, and defense-adjacent sectors that the United States has coded across 3 prior decades. Energy production is expanding. Deregulation is reducing the cost of capital formation. The structural architecture of a new American industrial economy is being assembled, not just in theory, but in reality, by the capital allocation decisions being made right now. That is not a demand cycle, it is a supply expansion. And that is for the Federal Reserve Chairman, who has spent 15 years arguing that monetary policy must take supply side dynamics more seriously, a meaningful one. The deflationary potential embedded in AI-driven productivity is not speculative in its mechanism. It is structural in its direction. When automation reduces the marginal costs of labor-intensive services, when computational intelligence accelerates decision cycles across logistics, manufacturing, and finance, and when the coordination costs that have historically limited productivity gains collapse under the weight of better information processed faster, the inflationary pressure that blunt demand management is designed to address may give way to a supply-side dynamic that monetary policy has not had to navigate at this scale since the early decades of the Industrial Revolution or the late 19th century. A monetary framework less dependent on blunt rate tools and forward guidance and more attentive to structural signals, which Warsh has argued for consistently, may find more traction in this era than any that preceded it. And the Trump administration's economic agenda rests on the structural pillars that are, in their medium-term implications, supply-side in character, tariffs, trade reorientation, to rebuild domestic industrial capacity, energy dominance through expanded domestic production, deregulation to reduce the cost of capital formation, and fiscal investment in infrastructure, technology, and defense. Each of these carries inflationary implications in the short term and disinflationary or deflationary implications over the medium term, if the supply side response materializes as intended. Now, the Federal Reserve under Warsh is being asked to navigate that transition. The president wants lower rates. Lower rates accelerate investment and growth in the near term. Warsh has argued that lower rates are achievable, but only if the balance sheet is disciplined and inflation credibility is preserved. The tension between those two positions is not theoretical. It will define his first 2 years at the chair. But the alignment goes deeper than that rate policy. Both the administration and the incoming chairman operate from a conviction that the institutional frameworks governing the American economy were built for the era that has passed. The administration attempting to remake trade architecture, industrial policy, and the structure of global supply chains. Warsh is attempting to remake that monetary framework that governs how the Fed interprets price stability, manages its balance sheet, and communicates its intentions to markets. These are parallel reform projects, running on parallel tracks in the same political and economic environment at this very moment. Whether they compound constructively or collide along the way is the institutional story of the next 4 years. What is visible now is the opening condition, for which the first time in the post-2008 era, both the executive branch and the central bank are led by actors who believe the existing framework must change and who have publicly stated what they intend to build in its place. And why this moment may be his. Jerome Powell spent 8 years building a record by which history will judge him. Kevin Warsh has spent many years building an intellectual framework by which he intends to be guided. Powell managed through crises, and that required improvisation. Warsh arrives with convictions already formed, arguments already tested in public, and a philosophy already stress-tested against a decade of events he watched from the outside of the institution. That 15-year remove from the chair is not a liability. It is, in the current environment, something closer to an advantage. He is not defending the policies of the prior era. He is not tied to the models that failed to anticipate the post-pandemic inflation surge. He is not required to explain why the transitory call was made and held as long as it was. He enters with a clean slate on precisely the questions that define this very moment. The reforms he has called for are substantive and, in the current political environment, plausible. A revised inflation framework that weighs supply-side indicators more deliberately, a balance sheet reduction path that is methodical, transparent, and not hostage to each month's CPI print. A governance model less reliant on forward guidance and more reliant on reactive precision. A Fed that, in his words at the Hoover Institution, straightens itself from its defensive crouch. These are not the reforms of a caretaker. These are the reforms of a chairman who intends to lead. Paul Volcker is worth recalling here. He arrived in 1979 with a single settled conviction: inflation had to be broken, whether the short-term cost. He held it through recession, through enormous political pressure, through market volatility that would have redirected a less certain man. When he was done, he had restored what economists call the nominal anchor, the credibility of the dollar as a store of value, and the credibility of the Fed as its guardian. That credibility financed 3 decades of growth thereafter. Warsh arrives in 2026 with a different problem, but a structurally similar task. Inflation is not at 1979 levels. It is at 3.8% and moving in the wrong direction under conditions of geopolitical stress. The balance sheet is not a theoretical concern. It's a $6.7 trillion fact. The credibility of the institution is not a Volcker-era nadir, but it has been genuinely tested by the inflation call of 21 and 22, by the political turbulence surrounding its own appointment. What Kevin Warsh brings to the task is a settled conviction, a tested argument, and an unusual combination of market intelligence and philosophical discipline that has not been present at the head of the Federal Reserve since the institution last had to genuinely rebuild itself. And finally, the new monetary era. Let the record be stated directly, this era of the Federal Reserve as the dominant actor in American economic management is closing. The era in which balance sheet expansion was the primary tool of economic governance is which forward guidance substituted for clear and consistent policy, in which the 2/3% target or the 2% inflation target was treated as both an achievable floor and a sufficient framework for a supply disrupted economy. That era ended on May 15th. What follows it is still being written, but its opening lines are visible. They read discipline over expansion, market signals over model outputs, supply side awareness over demand side orthodoxy, and credibility over convenience. Warsh has argued for each of those positions across 15 years. He now holds the chair that will determine whether the argument converts into a durable policy. The administration behind him is structurally aligned on the components that make that conversion possible: investment in domestic capacity, energy production, technological infrastructure, and manufacturing, reshoring that could, over a 4 to 6 year horizon, deliver the kind of supply side expansion that makes price stability and growth simultaneously available and achievable. The AI revolution is not background noise to this story. It is potentially the most significant supply-side event since the Industrial Revolution, compressed into a decade with deflationary implications that conventional monetary policies have not been built to anticipate. A Federal Reserve chairman who understands capital misallocation, who argued for a framework more attentive to structural realities, and who arrives at the chair with a clear mandate for reform may be precisely what this inflection point requires. The FOMC has its own calendar, the institution has a way of absorbing its reformers, and the political pressure will not simplify it. None of that changes the essential condition, which is the conditions for a meaningful monetary transition from the post-2008 framework to something more disciplined and more structurally aware, are more present now than at any point in the past 15 years. Kevin Warsh has prepared exactly for this. So that's basically going to be a bit of a gist of the new concepts of this monetary era that we have just entered, given the differences between Jerome Powell and Kevin Warsh, although they will be at the same table in the inflationary pressures and the supply side dynamics of the infrastructure build out, and with the pressures of influence from political institutions and the government, all correlate to bring about what could be one of the biggest expansions of infrastructure and build out in American soil up until this point. So history will account for the rest of the story as it unfolds, and I look forward to next month when we have the first meeting and we get to see where he stands at that time. So that's it for the Kevin Warsh address. Just a bit of a compilation of information on Kevin Warsh and his incoming tenure. And there's even people inside the Board of Governors who also think that this might be just the right person for the job at this very time. And I would say that makes a lot of sense in it, given that we've had a very straightforward, a great time with over the past 8 years with Jerome Powell. But things are changing, and we're having a whole new dynamic, and the economy is changing in ways that only someone different could possibly make that difference. And the difficulties can be arrested, and now we can move forward into this actual deflationary expansion, which could happen in a short period of time, talking about 10 years or so. But it correlates with the market, the way the market's rallying, and the potential of a lot of these infrastructure names, even though a lot of them are probably not going to make it, but a good amount of them are going to be very successful, more successful than maybe any period of time before. And NVIDIA is the greatest example of that until this point. And it's crazy too. I just heard this news the other day that the SEC is looking to approve the tokenization of 24-hour trading stocks on the token, on the blockchain's tokens. So you're going to be able to trade, I don't know which names, but probably the top names, or maybe all stocks, I don't know, as a token 24 hours a day, 7 days a week. I really don't know about that. I never really look forward to 24-hour markets. I don't really look forward to that. I really don't know how that's going to look, but it definitely, I would say that if we do have 24-hour markets, that would make trading a lot more sporadic and less clear, because it's going to be more well, maybe it'll be clear but less opportunistic, in the sense that they really like to have these moves happen overnight and in weird times during the day, just totally random, to be honest. But the inflows come in the morning, and then by the end of the day we get a weird move, and then we gap up or down. A lot of the time in the past months it's been like that. There's 30 minutes left in the market. We bounced all the way back up. That's insane. All the way down to the VWAP and bounced off of the VWAP right down to 740. Yep, almost perfectly down to 740 here. What a weird one. We had this big sell-off and then quite the bounce back. I guess we just came into some support here. It's kind of a nice breakout, and then I guess we just had to retest that VWAP to continue this trend. But we'll see if it gaps up, or if we get a sell-off, and like I said before, we may get it's possible to get a 10 to 15% sell-off even within the first month, or 3-6 months, 1-3-6 months, which brings us all the way back into this whole range. This entire range is up for grabs. I'm not saying that's going to happen, but it is historically accurate, and so whether there be something that causes it or not is to be told. And at this moment, obviously, we're still quite bullish, and we can definitely go for a new high. We can definitely continue this before we go lower, because there needs to be a reason for that to happen, and maybe this time is different. What was that? I don't like those Heikin Ashi candles. I don't like that. use these. I would like to use these, but I pay for TradingView too, but they don't let me use volume candles. Yeah, need to be unlimited. What does that cost? $100 a month? No, can't do that. Maybe I can afford that when I scale this account up to 5,000. Maybe I'll do TradingZilla and I'll upgrade my TradingView so I can have better charts. The VIX is really leveled out now, back down to 16, 17. It's a good spot. It's a good place for the VIX to be at. Volatility has eased down. All right, 23 minutes left in the market. See what this does. I probably won't take another trade unless something really big happens. But right now we're really getting this choppy action. We got a nice rally and a nice dump. Capitalize on, well, this one candle here, but really after this closure, I wouldn't expect this to bounce like this. This is kind of weird, to be honest, but seems pretty regular. Maybe the good news will come out overnight, and then tomorrow we can have a rally. Maybe we can maybe by the end of this week we can go for a new all-time high over 749. That would be interesting. That would be good to capitalize on. But we'll have to see. I'm gonna go get it. I gotta get it water. Let's. Still got a headache, man. I got a headache today. It's pretty bad. Sorry, okay. Okay. Just recover this whole sell-off like that. I don't really know what caused it sell-off. Well, whatever. I'm not on Twitter right now. I don't know what's going on. Wow, is SpaceX really gonna IPO next month? Is that gonna happen? SpaceX filed their IPO, and it says in their IPO, I guess, that Starship could enable point-to-point travel anywhere on Earth in about 30 minutes or less. That's insane. I don't know how that will happen. How will that happen? You think maybe the SpaceX IPO is a liquidity event to fund Terrafab? Maybe that's the big picture. Terrafab is pretty, it goes pretty deep, I think. SpaceX also owns 18,712 Bitcoin at cost basis of roughly 35,000 per coin. That's pretty nuts. Tesla holds, I don't know how many Bitcoin Tesla holds, but it's only like 1.5 billion. Why am I getting a call on my phone? I don't understand why I get a call on my computer that's so annoying. I get a phone call on my phone and then it transfers over to my laptop. Like, bruh, it's so annoying. Apple thinks Apple tries so hard to make their stuff so ergonomic, but they just ruin the experience. The more that I use Apple devices lately, I don't know about if it's just me, but all these Apple devices, I'm not gonna lie, I hate to talk shit, but Apple sucks ass. Apple's garbage. I hate Apple, bro. I'm not gonna lie. I spent too much money on this stupid Apple laptop and phone, and like the autocorrect is so horrible. It's ridiculous. Like every time I try to type words, it like just autocorrects to some totally incoherent statement. It makes no sense. There's no intelligence to it. Siri always pops up, and like I don't even press the button, it just pops up like Siri's trying to listen to me talk. Like, no, don't listen to me talk. I like what? I never asked for Siri. I've never once asked for Siri once. Even when I say the word, it doesn't show up. So how does it show up randomly when it's in my pocket? I don't get it. But all Apple's products are really taking a nosedive. So I really hope John Ternus at Apple, the new CEO, can really turn it around, because I don't know, they should hire someone like me to do quality control on their products, because honestly, I have experience in that, and I think I could point out all the problems, and it's so obvious, like it's terrible. There's like very few things about Apple products that are actually genuinely good or better than Windows or anything else at this point. And it's just honestly the truth. Like, as much as I like Apple products, I like them. They seem nice, they're aesthetic, they work really well, but like the features and the Siri, the autocorrect, the phone call, the compatibility, the pairing with the laptop, like it really sucks. Like you can't even really turn it off. Even in the control center on a MacBook, you can't even turn off your contacts. Like I don't want my contacts on my laptop. Like it has my laptop has nothing to do with my contacts. I will never make a phone call on my laptop. I will use Zoom, I'll use Discord, I'll use Microsoft Teams, Google Meet. Like, why would I need to make a phone call from my laptop? Like, Apple is just so annoying. I really don't like Apple. I would invest, but no, like, honestly, these things make me not want to invest in Apple. I don't hold their stock, and I'm glad I don't, because I don't want to own Apple. I'd rather buy Amazon. I'd rather buy Google. I think Google's going to win. Apple sucks, man. I really don't like Apple. But if Apple's listening, you should probably hire me. You should probably hire me, because I don't know what your engineers are doing. I'm not even going to say they're tweaking. Your engineers are bugging Apple. It's been a decade. You can't even get Siri to like even respond to a message. You just have it pop up. It's been like 20 years. You can't even get autocorrect to recognize the text I'm trying to type. Like you don't understand the sentence. I don't understand it. I really don't. I don't like Apple. But anyways, that's just my opinion on Apple right now. It's pretty bad. It's pretty bad. Oh my god, bro. Okay. Yeah, this Apple MacBook is about to crash. Like, okay. No, that's cool. That's cool. What is going on? Yeah, this thing is just so messed up. I can't believe it. Anyway, I'm struggling to get used to Apple products at all. Like, they just are not good. And also, Anthropic's Claude is terrible. Like, I literally I haven't used Claude for like over a week, and then I go to use it today. I type one message, and it says, "Nope, you're out of free messages. We can't respond." And it's like a basic message, a basic question, and it can't even respond. Like I literally haven't used it for days, and then I ask one question, and then it literally puts a yellow message, and it says, "Nope, you're out of free messages for today. Wait 6 hours until you can message again. We're not going to respond to anything you have to say." Like, I don't know what's up with this stuff. It's really frustrating, honestly. Like, I don't. These companies need to do better. No wonder Anthropic and Claude is getting kicked out of the Pentagon, because they suck, bro. They're terrible. It's garbage. I'd rather use ChatGPT. It's genuinely better. ChatGPT 5.5 is genuinely better. Grok 4.2 is better. I pay for Grok. I don't pay for Claude. I think Grok is great. I pay for Grok for a different reason, but I think Apple and Anthropic, as much as people hype them up, I think they're terrible and they suck ass. I hate Anthropic and Claude, and Anthropic and Apple. I don't like them. Garbage companies. I would never invest in them. You have my word. New billboard in New York City says stop hiring humans. Yeah, that's great. Perfect. Well, if they replace me with a robot, I'd like to expect a dividend, some severance dividend. Like, come on now, what are we doing? I've done like 6 job interviews this week, bro. Like, they don't understand how bad the job market is. I'm not even gonna say all these jobs, they're literally all scams. Like 90% of jobs that you see nowadays are just literal scams. They're just fake postings. They're like some weird fraudulent business that's just a recruiting scheme. It's all garbage. It sucks. That's why I'm trading, because I don't think I could literally find a career that's gonna actually make me money or have upward trajectory. I don't think it's really likely at this point unless I move to San Francisco. And even then, like, I don't even know if that would even work. So that's why I'm all in on the markets and studying economic history and trying to develop my ability to trade and invest for the long term so that I can actually live a better life and be able to access more opportunities and different things in the long term, especially investing in some of these names that I want to invest in now for the next 10, 20 years, which I personally believe is going to be massive. Bigger than the 90s, bigger than the late 19th century, way bigger, 100 times, 1,000 times bigger. And they don't understand it. I don't know about quantum, nuclear fusion. All these things could just add to the field, but those are not even part of the calculation at all. It's just the intelligence revolution. Is this thing frozen? That's insane. No, it's frozen, isn't it? Huh. Okay, interesting. I don't understand that. I gotta fix that. I need to figure out what's up with this computer. It's like messed up. I probably need to get a different computer, to be honest. I need to get a new Windows computer, man. I need to get a good Windows computer. Get off of this MacBook, because it's just not working out for me. There's just so many things. Even when I go in the documents and I try to look for something, like everything is so small, the text is so small, the images are so tiny. I can't even see. It's just terrible, man. The experience on Apple, I don't know. Like, maybe that's why I have a headache today, because I was trying to set this up for today and trying to look at stuff on my computer, and it's like just I'm like squinting my eyes looking at my documents folder in my MacBook. I can't even see anything. Like, I can't even read it. I'm sure they have a text size, but I don't know what's wrong with Apple, man. I don't like any of their products anymore. I really thought it was gonna be the right thing, but I'm starting to be convinced that Apple's just not the thing anymore. We should move to Windows and forget Apple until they fix their company, because their company sucks right now. And just being honest. Look at that, another sell-off. We bounce just to sell off again. Isn't this nuts? We get this rally, we consolidate, and then we get this massive sell-off, which is ridiculous. Bounce the VWAP all the way back up just to retest it 6 times in a row. Now we're getting another red candle. This is real choppy. I'm glad I took that one trade where I did, because it worked out really well, but this is this chart sucks. I'm probably gonna start trading right after lunch or before lunch, or both, either way. The morning today was pretty slow, so I mean, good thing I avoided that. But if I would have came on right after lunch at 1 o'clock, boom, we had that huge move. That would have been pretty easy to capture. I'm not gonna lie. that volume increased really quick. I think maybe that makes more sense to get on right when lunch ends. So that's right at 1 p.m. Eastern time, which is literally right here. 1 o'clock right here. The rest of the day. Not every day is going to be like that, but it really has been pretty similar lately. Like we just have a lot of chop during the day, and then we get a move either right in the morning or right in the after lunch, and then we gap up or gap down. It's just like a lot of unattainable price action unless you're a futures trader. If you're a futures trader, it's much easier, and I want to transition to that eventually, away from options into futures eventually, but I think it's not necessary until I have way more capital at my expense. Right now, I can't really even invest in another stock if I wanted to, and that's kind of the problem. So that's why I have to day trade. Okay, green candle, chop. This price action is pretty wag. I gotta go get lunch. Getting really hungry. I still have a headache. I don't know why. Apple gave me a headache today. Well, at least Apple hit $300. I predicted it was gonna hit $300. It hit pretty early. I thought it was gonna happen by June, July, but no, it happened already, so that's pretty good. I don't know how much higher Apple can go though, with the way it's looking. I feel like they're probably gonna sell off, or they're gonna become less beta. They're gonna have less beta. Obviously, it's hard to say that about a company like Apple. You know, they're what, like $3-4 trillion market cap. I don't know, what is their market cap right now? Let's see, where's Apple at? Their market cap's 4.48 trillion. Oh yeah, they're over 300, 305. I don't know why people just buy Apple just because, but if you actually try to use their products for a lot of different stuff, it starts to get pretty diluted. I don't know, I just feel, maybe I'm just used to the Windows from my whole life, but I really don't like the experience that I've been having using Mac OS and using my iPhone. It's really not good. The SanDisk chart is so crazy. This chart is ridiculous. Not just that, but like it doesn't even let me really do much. But this chart is insane. This chart is totally insane. It's almost hit 1600 and it's still going. Market cap's 228 billion. It's also weird here how on TradingView you can't even see the year, like you don't know which year. I guess this is 25. What is this turtle here? What the hell is this? The very beginning. What? Why don't you just tell me the date? What year is this? Like, it just says Tuesday, 18 February. Oh, 25. Okay, there it is. It's there. Oh, I was wrong. But yeah, this chart is nuts. This is where the real money is being made right now. Not for me though. I cannot afford anything there, not even close. There's no way I could do that. Big volume candle, what's up with that? Big volume candle. but it's not doing anything. What's up with that? That's a big spike in volume for what? It seems like unrealistic, that spike in volume right there. Didn't do anything to the price. How does that even make sense? They bought and sold? They accidentally fat fingered it and then sold it out? Probably. That's crazy. 5 million volume and what is that? 5 million volume, 3.8 million volume in a 5-minute candle, and it's going sideways. So I don't know. That must be a fat finger by some dummy at Jane Street or Citadel intern. Probably a Citadel intern that just did that. So dumb. Says YouTube doesn't like my audio. This is another one of these like chill jazz playlists I downloaded. I'm not allowed to use it, bro. It says like, we've detected audio in your stream belonging to someone else. Oh, I don't care. I don't care about that. I just want to hear the sound. I like the background music. I don't like to have too much. I don't like the open air that much. Unless I'm really thinking really hard about something. They don't like my audio. Well, I have to go back to using my other jazz tracks that are good. This one is like basically the same. It sounds the same as the other ones I use. It's probably just one song, one of these like songs in here that I just played that is copyrighted. I don't care about copyright. I care about making money from the market. Is this chart frozen for him? Computer's frozen over here. What the hell? And my computers are having real problems right now. What the heck? Everything's frozen on my other screen. The chart is literally not moving. Like it's stuck at 742.77. Oh, that was the close. Okay, no. Close. I didn't even notice, man. Okay, well that's it, the close. Well, that was weird. Anyway, so a pretty good day, honestly. Made really solid trade. How much was that trade? From 32 to 70, which is basically what I'm trying to do. And I got 118.75% on that trade. It went way higher. It actually doubled from there. It went like 300%. But hey, that's fine. Because, like I said, I'm trying to take a scalp, and I'm not trying to hold the winner as much as I probably should, because I need to get this account bulked up a bit. Like, being under $100 on the account is very difficult. So if I can get the account with a few trades up to like 200 or 300, then it'll be much more reasonable to take better trades. Taking $30 contracts is pretty tough. That's what I've been having to do lately. So, okay, so after hours, that's why I thought it was frozen. I'm like, I'm just tripping. I got a headache. But that was fine. I'm going to go ahead and do the write-up. Trade again tomorrow. I'll be back Friday tomorrow. Should be pretty solid. Should be a good opportunity. And I have a little bit of extra to risk, so now I could take a trade reasonably tomorrow without even worrying if it loses. But obviously, I don't hope that happens. Yeah, so I'll be back tomorrow, probably right after lunch. But I do have some more things to do. I have a couple appointments tomorrow, so we'll see. But yeah, good trade today. Made $38 or 118%. I'll be back.